It seems to be the scariest word in the English language today. Inflation. Everybody seems to be afraid of it. But we're always here for rational information. On today's fastest 4 minutes in finance, where inflation is and where inflation isn't. Hello once again, I'm Scott Inman. Remember those horror movies you watched as a kid? The girl was always alone. Hears a sound in the other room, and she walks slowly over to the door and opens it. By that time in the movie, somebody else has already probably died, so we know what's coming. But we're still bracing ourselves for that frightening moment. That's the way it's been for much of 2021 in the economy. We all know inflation is out there, lurking, about to jump out of the closet and kill us. But is it? If you turn on the TV news, especially the financial news, the bogeyman has already jumped us. We've talked about it several times here, and it's not hard to find it. In previous weeks, we've talked about lumber prices, and last week we told you used car prices are up 30% year over year. But we've also told you LPL Research believes the price hikes are transitory, meaning they should stabilize at some point. There are lots of reasons for this, which we've also talked about here, but today we're going to show you that not everything is going up at an out-of-control pace. In the latest year-over-year data, overall prices are up 4.9%. Now that's big. In fact, it's the highest level since 2008, but it's being driven by a handful of areas. Check out this chart from Yahoo Finance. Gasoline prices are the big flyer here, with prices up 56.2% since last summer. But remember, we weren't going anywhere last summer. Demand was extremely low, so that price hike is coming off a low base. The average price per gallon is $3.10, and that's within the 15-year average. By comparison, in 2008, it hit $4 a gallon. We all remember that. We already mentioned the used car prices. Transportation, like airline tickets and rental cars, are up big too. But again, think about how low they were a year ago when no one was going anywhere. And look at everything below the overall inflation number. New vehicles, food, and education expenses are modestly higher. If you're buying a new home, you're definitely going to pay a premium right now, but if you're renting, you're still getting a pretty good deal. Technology, including computers, smartphones, and internet service, are all pretty flat. All this points to transitory inflation. Not everything is going up at a higher rate. Now, we still believe that the big price hikes are being caused primarily by supply chain disruption, brought on in most cases by a rapid reopening of the economy. From a consumer's perspective, there are ways to avoid much of this inflation. You can put off a car or new home purchase. Vacation is discretionary, even though I'm sure we all do want to travel after the last year. We can wait this out if we are concerned about overpaying for things, and there are already signs that we may be seeing some stabilization. We mentioned lumber at the start of our video. Lumber prices hit new record highs in May, but have dropped 40% in recent weeks. So if that continues, it should trickle down to new home prices. There's also increasing evidence that the markets believe this to be true. After pullbacks through much of May, the S&P 500 recently hit another record high and is up nearly 13% year to date at the time of this recording. Bottom line here, inflation is definitely present, but not the boogeyman. Hopefully, we just checked that closet for you and nothing jumped out of it. Thanks for watching.